Ladies and gentlemen, good day and welcome to the INOX Leisure Limited Q2 FY21 earnings conference call hosted by Nirmal Bang Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Arora from Nirmal Bang Equities Private Limited. Thank you and over to you, sir.
Thank you, Aisha. A very good afternoon to all the participants for having joined the second quarter FY21 earnings conference call of INOX Leisure. I'd like to thank the management for giving us the opportunity to host the call. The management for this call will be represented by Mr. Alok Tandon, who is the CEO, and Mr. Kailash Gupta, the CFO. I would request the management to make opening comments about the quarter and their outlook, and subsequent to which we can open the floor up for questions. Alok and Kailashji, thank you so much for the opportunity, and at the doorstep of our 10th anniversary, it's been a pleasure associating with you, and thank you so much for your continued support with us as well. So I'd like to hand over the call to you for your opening remarks, and then we can take Q&A after that.
Thank you, Rahul, and congratulations to you on your 10th anniversary. All the very best. Hi everyone, good afternoon. I am Alok Tandon and with me is my colleague Mr. Kailash Gupta. On behalf of the INOX management, we would like to welcome you all to this call. I am happy to inform you that the Board of Directors has approved the quarterly results as well as the H1 FY21 results yesterday. These results have been uploaded on the website of the stock exchanges as well as on the website of the company. We have also uploaded the results as well as the earnings presentations. We are extremely excited and upbeat about catching up with you all, and especially when things have started to brighten up. And especially we were given a go-ahead to operate our cinemas in Maharashtra yesterday. Well, what I personally think is that the worst is behind us and now hopefully going forward there should be no looking back. Before I talk about the second quarter, let me tell you that our journey of the last 7 months has been a huge learning curve as the pandemic has taught us a lot and we are very much wiser, sharper as well as faster. Something which kept us in the hunt was the strong fundamentals, our faith in the passionate cinema lovers, some tough decision making and above all, a great team which stood up to the task when it mattered the most. Friends, we are committed to emerge out of this pandemic as fast as we can. We are committed to keep crossing milestones and delivering upon our promises. We are committed to keep entertaining India. Allow me to quickly share the agenda of the call with all of you. I will take you through the second quarter numbers as well as the H1 numbers. I will then talk about the expansion and the future screen additional outlook. We will talk about the generous lineup of content in store for us on both Bollywood and Hollywood fronts. I will also take a few minutes to update you about the geographies where we are allowed to operate and which states we are still awaiting the green signal from. I will also update you about our engagement with the landlords and a bit about our engagement with the content producers and studios. We have engineered our safety protocols and SOPs as per the government guidelines, which I will briefly touch upon. We will also discuss the latest consumer surveys on cinemas, which makes us feel extremely optimistic about the days to come. I will also share some information on how we are managing our cash flows during this period. On this call, what I would like to do is walk you through some of the significant financial parameters as contained in our presentation, and after that, we will open it for any questions that all of you might have. Let us look at some of the financial highlights for Q2 and H1 21. As you all know, all our cinemas have been closed during this lockdown for all the days of Q2 FY21. This has impacted our performance severely. For Q2 FY21, the revenue was only rupees 5 crores as compared to 524 crores in Q2 FY20. EBITDA was at a negative 30 crore rupees as compared to a positive 107 crores in Q2 FY20. In Q2 FY21, we had a PAT of negative 48 crores as compared to 51 crores in Q2 FY20. For H1 FY21, revenue was only rupees 8 crores as compared to 1,020 crores in H1 FY20. EBITDA is minus 65 crores for the half-yearly closing on 30th September as compared to 199 crores positive in H1 FY20. PAT is at negative 99 crores as compared to rupees 92 crores in H1 FY20. As there was an impact on revenues during Q2 FY21 due to the COVID lockdown, we have also tried to keep our fixed costs under control. I am happy to inform you that all our efforts have been successful in bringing absolute control over operational fixed costs during Q2 FY21. On a year-on-year basis, our employee benefit expenses, including agency manpower, have gone down from 71.6 crores to 15.7 crores in this quarter. Power and fuel and R&M expenses have decreased from 42.3 crore rupees to rupees 5.2 crores in this quarter. Our expense towards rent and camp during Q2 FY20 was 97 crores, and in this quarter we have invoked force majeure clause, and hence there is no outflow of rent or camp. We've also reduced our other overheads quite significantly during this quarter. They have gone down from 32.4 crore rupees in Q2 FY20 to rupees 13.5 crores in Q2 FY21. As we have always said, our balance sheet is very strong, and currently our net debt to equity ratio as on 30th September 2020 is around 0.09 times. Additionally, our promoter and promoter group shareholding is 51.89%. In terms of shareholding structure, as on 30th October 2020, FIIs own about 11.21% of the company, DIIs own about 19.2%, promoter and promoter group hold 51.89%, and the public and others own 17.7% of the company. The share price as on 30th October 2020 was rupees 253.8, which gives the company a market capital of roughly about 2,611 crores. Regarding property openings for financial year 2021, we stand by our guidance as provided during Q4 FY20 results. We have 11 properties that are more than 85% complete. We are confident about opening these properties in FY2021. These 11 properties have 41 screens with 6,374 seats in them. Beyond this, we have a very strong visibility of property openings based on the agreements already signed. I feel proud to share that we have properties signed up to the extent of about nearly 1,000 screens, 142 properties, and with 8,84,642 seats. And once this pipeline is fully implemented, we will be about 300 properties strong with 1,656 screens and about 3,35,483 seats. At present, we are operational in 18 states and 1 union territory, present in 68 cities with 147 properties, 626 screens, and 1,44,467 seats. There has been a lot of conversation around the availability of fresh content. The lockdown saw a few movies taking the digital distribution route, but the lineup looks absolutely fascinating and exciting, and I'm very sure that soon we'll have new movies in a cinema hall. The Ministry of Home Affairs had issued guidelines for reopening on 30th September 2020, which allowed cinemas to operate with 50% seating capacity. Subsequently, the Ministry of Information and Broadcasting issued standard operating procedures on 6th of October 2020, detailing the way cinemas have to be operated. INOX has been permitted to open cinemas in Delhi, Uttar Pradesh, Haryana, Punjab, Gujarat, Madhya Pradesh, West Bengal, Andhra Pradesh, Karnataka, Assam, Goa, Maharashtra, and Tamil Nadu. The company is yet to receive notification to resume operations in Odisha, Jharkhand, Chhattisgarh, Kerala, Telangana, and Rajasthan. Based on this, as of now, we are permitted to open our properties in our 123 locations with 528 screens. Another important set of stakeholders, I feel, in our business are producers and content owners. And we have been engaging with them and reiterating the importance of the theatrical run in the overall cinematic value chain. The entire ecosystem of the Indian film industry understands the strong fundamentals of the global cinema consumption chain, which begins with theatricals, which turns out to be one of the most value-generating medium. As I said earlier, some movies have taken the digital route, but now with cinemas opening and with so many states operational, we should see that the value chain setting into its routine, which is in the best interest of the industry. We are thankful to the Honorable INB Minister for announcing the SOPs. The SOPs are simple and audience friendly, and we will ensure that the overall cinema viewing experience is safe and reliable. As expected, the SOPs take care of all the possible touch points as envisaged by us. All our guests have to mandatorily wear masks, and there will be temperature checks happening at the entrance. We will also keep PPE kits available for purchase, which will include a mask, a pair of gloves, and a sanitizer. There will be pedal-operated touch-free hand sanitizers placed at important locations across the cinema. Our shows will be programmed in such a manner that there are no simultaneous entries, intermissions, and exits. And there will be extensive sanitization drills, disinfection processes at the right places and at the right moment. There will be a lot of focus on technology-driven initiatives. Various surveys have commissioned during the lockdown by various agencies to understand the prevailing consumer sentiment. The outcome of these surveys reflects that the passion and the fondness of the cinematic experience and entertainment is still intact. We have given a few case studies, and we have indicated also that how people are missing the movies and what percentage want to come up in a presentation. Currently, as I said, that we have got 41 screens which we will open, and these screens are more than 85% complete. We would require an additional capex of 28 to 30 crores to complete these screens. As on 31st of October 2020, our cash holding is rupees 94 crores, which includes undrawn limits. As on 31st October 2020, our gross debt less cash is 127 crores. As on 31st October 2020, our gross debt less cash to equity is 0.12x. Overall, we've seen extremely encouraging signs of recovery from markets, though it is still a long way for us to get back to normal occupancies, which has been impacted by COVID-19. So this is what I wanted to share with you in my opening statement. We are more than willing to answer any question you should have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Yeah, thanks and congrats to management on Maharashtra opening up and to the industry. So my first question is on that only. So Maharashtra, now that it has opened, now do you have more clarity on the timetable of the movies, because it was a key thing missing. And in your slide number 12 and 13, you have given the name of the movies in a particular order. Is it your expectation that movies will come in that order with slight variation here and there? And Q4, could it be a very high bunching up because 7-8 months nothing has happened? So suddenly could there be a flurry of movies in Q4?
Well, Avnish, I would say that yes, Maharashtra announced the decision to open yesterday, and now all the producers who are holding back the releases will announce the dates of the release. It's too early as of now because we all know it happened only yesterday. So maybe in the next couple of days we hear that which movie is coming when. But having said this, we've been told that Suraj Pe Mangal Bhari is being released during Diwali. So that's a very, very positive sign. Also, when you say that we have given a list of movies in our presentation and whether they will be coming in that order, well, I don't think. These are just names of movies we have given, and we are hopeful that they'll be announced or the dates will be announced very soon by the respective producers and content creators. Will you say that there will be a bunching of movies in Q4? I doubt, because as it is, we show about 1,100 titles every year in INOX, which is about 20 titles every week. So I doubt there will be bunching up of movies. We'll be giving ample show time and ample screen space to these movies when they come. And at least for the next couple of months, I don't think that there'll be a bunching up or there'll be a pressure on us to give or to accommodate every movie, because we ourselves will be accommodating all these movies which are awaited to be released by giving them good screens. And when I say good screens, it means more show timing and more number of screens. So that's how I look at it.
Similarly, on Hollywood movies like Tenet, is there any thought process which is there? Because these movies, obviously, global launch has happened. So do you think there will be enough interest in such movies because maybe some piracy would have happened, etc.?
Well, there's a lot of interest for Tenet, and everybody is just waiting to see it, including me. And yes, hopefully we should also see that Tenet coming and hitting the big screens. We talked about piracy. Well, piracy has been a bane throughout. It happens in every possible country, but still, the experience of watching a movie on the large screen cannot be taken away, Avnish. So yes, there's a lot of interest, and I'm very hopeful that there'll be great footfalls when this movie is released.
So one final follow-up on this is you mentioned Q4 you don't expect bunching up to happen. So is that because currently there is no clarity on when 50% of the cap will be lifted and movies will be viable more when that 50% is lifted? So there will always be that kind of waiting. Any clarity when you expect 50% cap to be withdrawn?
Okay, there's no, I can't even comment on when the 50% cap will be withdrawn. That depends on the central government and various state governments. But when I said that there'll be no bunching of movies, Avnish, it was that there'll be, because there are no carry forward movies. Normally what happens is that we've got old movies which we carry forward and show them in our properties in the successive weeks. So here there'll be no carry forward of any movie. It'll only be new movies we'll be showing. And hence I said that there'll not be a bunching up. People can release, content creators can release their movies every Friday, and we have ample screens to show all of them.
My second question is, this was a good time to evaluate which property is working, not working. You had a lot of time. So your competitor has closed some of the screens. So any similar thought process for the coming quarters? Any closure you will evaluate?
We have not evaluated any closure as now, Avnish, because what we feel is that the properties which we have are performing as per our expectation, and there's no thought process even going forward to shut any screens.
And last question, you were saying that TV ad volumes are at a multi-year high. So in your case, obviously, it's much more uncertain. But how are you dealing with this? When do you see advertisers really taking INOX in their media plans? Will it be linked to the 83 Suryavanshi kind of movies? So which means not before December end, for example. So what's the what's the strategy you are deploying here?
Well, Avnish, the advertisements are. I would say it all depends on footfalls. And today we know that there are no footfalls. Yes, advertising will take time. I can't give a timeline that how soon advertisers will come back to us. But yes, if there's a blockbuster movie, we will have people coming to us so that we can show their ads on the screen. I cannot give you a definite timeline. Big movies, yes, 100% will really help this thing. And you said right that there are some marquee movies waiting to be released, and that's the time when I feel that advertisers will come back to us.
Okay. That's all from me. Thanks a lot and all the best. Thank you.
Thank you. The next question is from the line of Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity. Sir, I have two questions. First is that in the presentation we have stated that we have got a permission for 528 screens. So out of that, how many screens have opened, and what are the initial trends in terms of occupancy and ATP, if you can just highlight?
Well, 528 screens, yes, is there in the presentation, and we've added 129 screens of Maharashtra in this because that we got a go-ahead only yesterday. So earlier, if my math is right, we had about 399 screens operational. We are not operating all screens. The reason being is we said this is the right time to do some repair and maintenance in those screens, so that when big movies come and there's 100% occupancy, we won't have to shut them out again. So that's the reason. And number two, they are all library content which is being played, except one or two new movies. Otherwise, it's all library content. And hence, we are running less number of shows with less number of screens across all the INOX properties. So that is where we are, where the screen count is concerned.
The occupancy and the ATP part trend?
Well, occupancy is I would say, again, in a library content, we are happy that we are getting mid-single digit occupancy percentages. I think we should be happy with that these movies came about 8 months back, 9 months back, even a year back, and we are still showing them and people are coming. So occupancy will only increase when there'll be new movies. And ATP, let me tell you, is that we are selling tickets between, let's say, 79 rupees to 110, 120 rupees. That's where we are. These are for regular seats, and for recliners, yes, it's definitely more. Our overall ATP is about sub 140, 145, and that trend will continue until we get new movies. But just to tell you, in Bengal, we had 6 new releases. Our ticket prices were at the pre-COVID levels. So your ticket pricing also is a function of whether new movies are being released or not.
And sir, what kind of F&B discounts are we giving currently to patrons? I mean, any promotional discounts have we rolled out?
Yes, for F&B, we are doing a lot of work. We have got some low-price special combos. We have got occasion-based and movie-based combos. For example, we made a special combo for the BTS film we are showing these days. We are doing a lot of pre-booking with our guests, and we are targeting customized food offerings for them. So there's a lot of work we are doing where F&B is concerned, so that people come, they eat, and they enjoy their food in our cinemas. So, well, I would like to comment on that even the strike rate is quite healthy that we have these days where F&B is concerned, and offers have been rolled out. Quite a few of them have been rolled out.
So one last question. I mean, you mentioned that currently a lot of library content is getting played. So are we attracting any kind of ad volumes for that content, or is it a complete blackout kind of a situation?
Well, I won't call it a blackout. There are very few advertisers who want to show their products in library content. But the word blackout is not right, because we still have some advertisers with us. But as I said in my previous answer, that it's just a matter of time before new movies start releasing, and that's the time we'll be having ads on the giant screen.
So say earlier, if it was 10 minutes per show, I mean, can you give out a rough approximation, whether it is 2 minutes, 3 minutes? I mean, where are we on that front?
Well, it's too early to say. Maybe, I don't even know. Because we've got such few ads that it's difficult even to keep, but not more than 2 or 3 minutes for sure.
Thank you so much, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Urmil Shah from IDBI Capital Markets and Services. Please go ahead.
Yeah, thank you, and congrats on strong cost optimization. So my first question was if you could throw more light on the engagement we are having with developer partners as to what proportion of our properties we would have already got complete waiver, also that is complete waiver for the shutdown period, and discounts or rev share model for the rest of the year.
Well, Urmil, we have had negotiations with most of our builders, and we have got a complete waiver during lockdown. So I can say approximately 60 to 70% of the properties have already been documented where we have got a complete waiver during lockdown. And so these are the numbers. And let me also add that going forward, most of them have been helpful, and they've realized that a mall and a multiplex have to coexist. And hence, we have got in most of our properties revenue share till 31st of March 2021. We are in active discussions with everyone, and the ones which are remaining should be signed and documented soon.
Sure. It would be helpful if, at least a range of the kind of blended discount that could be possible in the second half, if it could be shared. I mean, your peers shared that while the discount might vary between Q3 and Q4, but there is a good chance that there would be up to 50% discount.
Well, I would not like to talk about the percentage, but I would say that we've got some substantial discounts from our developer friends, and that I think is a very positive sign, but actual numbers I would not like to discuss.
Sure. So, and as regards the cost, apart from GNA, employee cost has been the key parameter for limiting our cash burn. So, as we reopen the operations, what is the level of employee base in comparison to the pre-COVID level that we are looking at operating on?
Well, let me tell you that the manpower and the employee level will be much lesser than pre-COVID levels, even when we resume normal operations. I would say that there will be a substantial reduction in our manpower cost as well as the number of people we occupy. And that's because of a couple of reasons. We took the advantage of the lockdown to do multitasking, to train a lot of people. Every employee in the company today knows how to operate a FOSS. We also did a lot of work in terms of teaching people about the other aspects of another department. For example, an IT guy was taught about engineering, an usher was told how to sell a popcorn, a salesperson was taught how to sell tickets. So everything was done. So that today when we open, it's a company where everybody can do anything and everything. So that's something which we have done. And instead of giving you actual numbers, I would say that you'll see a substantial reduction in a manpower count as well as the manpower wages.
Sure. So just last thing, so keeping this into account and the restriction of up to 50% of occupancy, what should be the range of utilization which should enable you to break even? Maybe not for Q3, but for Q4 onwards.
Well, I think this 50% Urmil is only for a short period of time, maybe for the next couple of months. And after that, it will be back to normal 100% capacity utilization. So working on numbers that will be a break-even point depends on which movies are coming, how many shows we are running. So there are quite a lot of variables in it, and there will be no particular answer to it. As I always say that this has been an aberration, the entire COVID issues and we being shut down. In a long history of 100 years in the cinema, if it happens for a year, it's just a blip. So we should be back to normal very soon, Urmil. And as I said, that there are a lot of permutation, combinations, variables required for us to give you that one number. And hopefully, in the next couple of months, maybe the end of FY21 when we speak, we should be talking about 100% numbers. That's how I look at it.
Okay, sir. Thank you so much and all the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. The next question is from the line of Vikram Ramalingam from Maybank. Please go ahead.
Yeah, sir. Congratulations on getting the approval to reopen the screens. My question was regarding your role experience in West Bengal and Assam, where the fresh content was released. I mean, can you give some color, share some insights or conclusions that you've had? So accordingly, I'll ask some pertinent questions.
So Vikram, as I said that Bengal, we had 6 new movies which were released. We had some good occupancies, and the most heartening thing was that families were coming, and it was nice to see families coming and watching movies. We had a few household shows. When I say household means, yes, it's at 50% capacity, but that's again a very promising sign. So it all depends on which movie it is, how do people perceive it to be, because if you see that we all Indians, we are tired of sitting at home. There's a lot of pent-up demand also. And as we saw great footfalls in Bengal for new movies, we anticipate the same for new movies in other Indian languages as and when the producer or the content creator announces the release. So it was a very positive sign. We had some nice numbers. Our ticket prices were back to pre-COVID levels for these new movies. And also we saw quite a healthy offtake of F&B in that period.
Actually, what I wanted to even ask in that context is, now that in West Bengal you had a more or a closer to normal situation, did you see any change in trend? Like earlier in pre-COVID times, the weekend and weekday, there used to be a marked difference in the occupancies. By any chance, has that gap narrowed? Like, did you get a sense of that now that a lot more people are working from home, people are even coming in, let's say, the morning shows during weekdays? Was there such a trend?
Well, I don't think that's the right way of putting it for West Bengal, because all 5-6 days were holidays over there. So like even a weekday was a weekend because there were 6-7 days of holidays. So we had people coming in from morning to evening, whether it was a Thursday or a Monday morning. So that's how it was. The asset test will come now if there's a new release in a non-festive season. So that will be the asset test. But yes, I personally feel there'll be a slight shift of viewing pattern from weekend to weekday. As you rightly said, that lots of people are working from home today. So I feel that should a new content come and still people work from home, we could see higher occupancies on weekdays and especially early evening shows, maybe a 5:30, 6 o'clock show. But that only time will tell.
Okay, my final question is on the rent agreement. So you've shared a revenue, you've forged a revenue sharing agreement with your developers till 31st March. But generally, do developers prefer a fixed rent model because of historic reasons, or they like it that their revenue from cinemas are fixed? I mean, do they prefer that by any chance? Like, do you get a sense that they would even in long term prefer revenue share after 31st March 21?
Vikram, this is very developer specific. So some may prefer fixed rent, some may prefer only revenue share because they know that we'll have great footfalls and great revenues, and hence they would like to take a larger percentage. So that all depends. It's very, very developer specific. Going forward is anybody's guess. So I can't comment on behalf of the developer, but I can only say is that most of our leases till 31st March 2021 are on rev share now.
All right. Thank you so much. That's it from me.
Thank you. The next question is from the line of Arun Prasad from Spark Capital. Please go ahead.
Yeah, thank you. I have two questions. First, on the amount of capital raise that is being proposed, does it mean that you are expecting a very high monthly cash burn in the next 3-4 months, or a normalized cash burn over a longer number of months? I am not able to figure out exactly what is the thought process for and how you arrived at this at the amount. Any light on this?
Well, let me tell you, the board has allowed us. They have given an enabling resolution for the company to raise 250 crores, but that does not mean that we'll be raising the money. It depends. Yes, we've got a resolution from the board, and then we will decide when we have to raise that money. So as of now, there's nothing at all. Should we require it, we'll go to the market to raise it, but nothing as of now.
And just to support to what Alok is saying, of course the cash burn is going to be higher than what it used to be in the shutdown position, because the lot of operating costs will kick in, like housekeeping and sanitization, to manpower costs which we have to pay to the people on the ground, and the electricity. So of course the burn rate will be much higher than what it used to be earlier.
No, so just if I had to share my thought process, so if today you are burning some amount, so if let's say it becomes 3x, so the kind of capital raise that you are looking for somewhere around 7-8 months of burn rate. So do you expect 7-8 months the situation to be like this?
Well, we don't even know when we'll go for a raise, for for an issue raise or whatever it is, or for raising money, because till now we just have an enabling resolution from the board. That's it. Today, I think our books are strong enough. We have got enough monies with us to run for the next couple of months. And yes, we have an expense of 10 to 12 crore rupees a month. But as Kailash just now said, it increased a little bit. We'll only come to know in the next couple of months that what our costs will be going forward. But as of today, we are quite comfortable with our cash position we have.
Fair enough. My second question is on trade receivables. I see substantial reduction in the trade receivables compared to March to September. Does it mean that a lot of small and medium enterprises or regional advertisers had paid you back, or is it only national brands? Can you some light on the mix and proportion on how it has happened? This because this looks quite positive or very large positive surprise as compared to, say, your competitor whose reduction is not that high as compared to this.
So let me tell you that we had a very special drive in terms of the recoveries, and we were after everybody virtually, on a day in, day out. And our sales team and finance team worked together hand in hand, and we recovered the 85% of the pre-COVID outstanding. We are left with very small amount. Out of that also a substantial amount has been recovered in the month of October, and we expect that the entire recovery will be completed by, say, latest by November end or maybe December latest. So we don't see any challenge in terms of the recovery. Of course, we had a special drive and focus to recover, and fortunately we are successful. So what we have recovered is a mix of everything. I mean, it is right from everybody, whether it's small or a big. So we have recovered money virtually from everybody.
So just to add to what Kailash is saying, you're right. We had a laser focus on collection. They were team set up. They were given targets. They were monitoring, or the team was monitoring every day how much money has hit the bank. So there was a relentless focus and laser sharp focus on our sales team to collect monies. We said that everybody is at home during lockdown. You can't travel. But yes, that cannot or should not prevent us from picking up the phone and speaking with people. And our advertisers and other people also, whoever had to owe us money, helped us and released monies and gave it to us. And Kailash said it's now a very small amount of money which is left, and we are very hopeful that by end of November, early December, we should be having these also.
That was helpful, but my question was a little different. Was the proportion of the national brands was higher? That is why your collection is also higher from the national players, or regional players have also started paying?
So let me tell you, the number of the customers from whom we were supposed to recover the money was more than 200, just for your information. And we have closed almost with the around 160, 170 as your overall number, I mean number of customers. So we are left with only 30, 35 customers. And this includes everything. So I mean, the national vendors were only, few which you can count on your fingers. So it is a big mix of everything.
So national, regional, as well as local vendors. So everybody paid whatever they had to, and hence only a small amount is left.
Good. Thank you very much. That's it.
Thank you. We would request the participants to please press star and 1 to ask a question. The next question is from the line of Yogesh Kirve from B&K Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So just wanted to ask, so are film producers or distributors engaging with us or looking for any concessions, at least on the next few months perspective in terms of the revenue sharing arrangements or the exclusive windows? Or is it that the pre-COVID rules apply even now?
Well, yes, we are in touch with the distributors and producers. We are just talking about that when the movie will release, what's the right time. So discussion today is happening on those terms. What's happening in various parts of the country, how many footfalls are there, it's not being discussed, or rev share or exclusivity is not being discussed at all. So today I think the first thing we all need as the cinema exhibition industry is to release movies and get people in. That's the most important challenge for us. And that I think is even their priority of the producers, that people should come and watch their movies. So As we speak, yes, we are discussing on when a movie should be released rather than what terms, exclusivity, or any other commercial aspect.
Thanks for that. Secondly, regarding the F&B, the experience in West Bengal. So in terms of conversions, in terms of number of footfalls that normally happens, and how many of those usually buy F&B. So had that conversions been similar to pre-COVID levels, or been lower, or any light you can share?
Well, F&B in Bengal was just like pre-COVID levels, and I would say in some cases even better than pre-COVID, because we were only looking at the festive season where people come and buy more food and they come out with their families to enjoy. So whether it was the strike rate, whether it was our SPH, whether it was the amount of items a person purchases, all those were higher than what they were in pre-COVID. But that is just a small period. That was a Durga Puja period. And now, even after Durga Puja period, when people come to see new movies, so we've seen, yes, they spend a lot on F&B, but anybody coming to see a library content may not spend that amount of money where F&B is concerned. But answering the question, in Bengal during Durga Puja, we were at pre-COVID levels, if not better, where F&B was concerned.
Okay, and finally, so this the central government guidelines allows sale of F&B, but have any states put on any restrictions on the sale of F&B as a part of their state-specific guidelines?
No, not to my knowledge, Yogesh. There's no one which is saying that. I don't think any state has come out with a SOP which is stricter than that of the central government. It's all in line with the central government SOPs.
Okay. Sure. Thanks a lot for the responses and wish you all the best.
Thank you. The next question is from the line of Girish Pai from Nirmal Bang Equities. Please go ahead. Girish, your line is in talk mode. You can go ahead, please. We would request you to please unmute yourself if muted from the handset. Girish, we are not able to hear you. As there is no response from the current participant, I have muted the line. The next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir, and thanks for taking my question. Sir, on F&B, just a clarification. I think my understanding was that F&B sale is not allowed as of now in the multiplexes, at least in Maharashtra. Can you please clarify?
Well, Maharashtra has just opened yesterday. What we know is you cannot sell food inside the auditorium, but there's no restriction in selling food in the lobby or from the concession counter.
No, but can the patrons eat the food inside the multiplex is the question.
Well, people have been eating in other parts of the country, and you refer to Maharashtra specifically. As I said, that order has only come out yesterday. We have not opened any screens in Maharashtra. So I'm not able to comment on that. But in other parts of the country, people can buy food and consume it inside the auditorium.
Understood, sir. And the other question, you alluded to the increase in the cash burn because of the opening of the multiplexes. So can you quantify, let's say with respect to September, what was the number, and going forward for the next 1-2 months, what is the sort of ballpark expectation on the cash burn?
Sarvesh, it's difficult to predict. The challenge is that the screens are opening in a steady manner. So it's not that we have a complete open up of the entire screens across the nation. The real challenge is still we are left with 7 state or about 98 screens. And even the Maharashtra is announced yesterday, and the Tamil Nadu is opening from 10th. So it's very difficult to predict the number right now. They are also trying to contemplate the number, but really speaking, very difficult to give you any kind of prediction right now. But of course, it's going to be higher than what we are doing currently.
But let's say, what was the cash burn in the month of October for you?
Cash burn for the October, still we don't have the full numbers with us because still, we were busy with this board meeting time. So we still don't have the number. But give you the sense that the pre-COVID, our financial reflects were 10 to 12 crore was average, cash burn in the shutdown situation, which is of course is going up. But really speaking, difficult to give you the number right now. It's too early to talk about it.
And the planned fundraising, of course, I understand that this is an enabling resolution, but will this be in the form of pref allotment to promoters or will be in the form of QIP?
I think you will have to wait, Sarvesh, for the right time to predict about it or talk about it. This is not the right time to discuss on this particular issue.
Yeah, as of now, as I said, it's only the enabling resolution. The form, how we have to raise it, we'll decide later.
Understood, sir. All the best for the coming quarter, sir. Thank you.
Thank you. The next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Yeah. Good afternoon, sir. Sir, you must have noticed that there is a lot of negativity against the film industry in the social media. At least in Bombay, I have seen. I don't know about the other parts. This will not affect our revenue in the future and consequently the profits?
Sir, people like me, I don't know about you, but we are just dying to go to the cinema and watch a movie, and I think that's with most of the Indians. So the negativity which you are talking about, I don't think that will ever reflect in footfalls. People may say whatever they want to. I would not like to comment on that. But let me tell you that for us Indians, watching a movie has been in our DNA, is in our DNA, and will be in our DNA. So let me assure you that come one big movie, and people will be back to the cinema halls with this, and there will be the same hustle and bustle in the lobbies. Well, let me tell you, even when there's no new content and there's only library content, still we are seeing people in our halls. So, aap to keh rahe hain, I don't think that's right. And as I just said that, even showing old movies in a hall is getting in people. So, I want to see those days when there's new movie and we have the same hustle and bustle, the word which I used just now, back in our lobbies. So I doubt that will ever make a difference.
Okay. Thank you very much.
Thank you. The next question is from the line of Anurag Dayal from HSBC. Please go ahead.
Thank you for taking my question, sir. So I have a question regarding this rent negotiation part. So in the release, it is written that of about, I think, 150-160 crore, which has been recognized, around 106 crore is yet to be settled. So is this in reference to the actual letter received? Because you mentioned that 60% agreement has been reached.
Correct. So you are right. So wherever we have said that the number of deals has been settled, it's settled with some sign off with the concerned developers.
Okay, sir. And another thing about the CAM charges, I understand from the arrival they say that they have to pay some CAM charges at actuals. So what are your negotiations with the developers on that?
So whatever deal we have closed is closed along with the CAM. For me, the outflow is one, whether it is in the name of the rent, CAM, or conducting charges or something else. If I am paying to a developer, I am paying for a property. So the negotiation was, in a total, not over individual amounts. And fortunately, we are able to settle with, everybody till now with the zero rental for the rent or CAM charges for the shutdown period. So, I mean, I can't comment about the other one, but that's our deal.
Okay. Thank you so much, sir. That's it.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So I have just one question. That movies like 83 and Suryavanshi, which were to be released this Christmas, they seem to have been further postponed, right? And then there are movies, bigger movies like Lakshmi, Big Bull, etc., which are ready and will be releasing on OTT over the next week or the next couple of weeks. So my question is, are we in talks with these producers to do a parallel theatrical release, or we are very strict that will not allow such movies to be released in theaters?
No, any movie which has gone on OTT will not be shown in INOX screens, that's for sure. But yes, we are in talks with the people who will release their movies on the giant screen, whether it's 83, Suryavanshi, or even other content creators. And we are talking to them about the the releasing of the movies as to when they would like to release it, what help we require together, how we can work on it. So all those talks are taking place.
Okay. So this is the only INOX stand, or the entire multiplex chain has taken a stand?
I have no clue. I can only talk about my company. That's something which I can comment on.
Sure, sir. Thank you.
Thank you. The next question is from the line of Rakesh Sharma, an individual investor. Please go ahead.
Yeah, thanks for taking my question. So promoter and promoter group stake is around 52%. So, sir, I wanted to understand your thinking around what is the minimum stake you would like to maintain for the promoter stake. For example, would you like to see the promoter stake go down below 40%? Would you be comfortable with that?
Sir, that's not for me to answer. That's for the promoters to answer that what stake they are comfortable with. So I may not be the right person to answer this question of yours.
Okay, thank you.
Thank you. The next question is from the line of Yogesh Kirve from BNK Securities. Please go.
Yeah, just a clarification. So the rent concessions that we have booked in the first half of roughly about 140 crores. So this pertains to the waiver for the first shut period itself, or does it also include the concessions for the second half as well that we would have tied up?
Yogesh, we cannot account for any futuristic, the amounts. So it is, but it's only the shutdown period.
Okay. And Kailash, so this amount really works out to like 50% of what would have been normalized charges. So just trying to reconcile with the other statement that you made that 60-70% of mall developers have already agreed on the waiver. So if you could just help reconcile these things.
I think you are confusing with two things. One is the amount, the second is the number of properties. And I think this is something where if you need more detail, maybe something we can discuss one-on-one, Yogesh. But
okay.
I mean, really, what you are saying is to tell me the reconciliation of the property versus the amount. It's something difficult to give the detail at this point of time.
Yeah, no problem. Thanks a lot for this.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one now. As there are no further questions, I would now like to hand the conference over to Mr. Girish Pai from Nirmal Bang Equities for closing comments.
To the INOX management to giving us this opportunity to host this call. Would like to thank everyone for taking part in this. Wish you all a good day.
Thank you, Girish. Thanks.
Thank you. And I would like to thank everybody on this call for taking interest in our company. And let me assure you that we are coming back stronger, faster, and more agile than we were. We are coming out much more stronger. Thank you.
Thank you. On behalf of Nirmal Bang Equities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.